Please welcome to the show, Mr. David Stryzewski. David, thanks for being on, brother. A little bit of a smattering of things today. We get some more tomorrow. Anything change your mind or your direction from the numbers we got today?
Well, I don't love seeing GDP decline. Obviously, that's the engine to our economy. But as you and I have been talking about here, we know that there's going to be changes to GDP as a result of, when Department of Government Efficiency making cuts. Guess what? We're going to see some of these things adjust. So are we in a terrible place today? I'm not exactly sure. I think ultimately, looking at the labor market right now, it's mixed, right? So Just like you said, cancel each other's out. But the point that I'd like to note is that, this is a 3.5-year high, though, for the continuing claims. And there's plenty of people that have stopped pursuing jobs as well that we could certainly even add to that list. So a lot of those in the tech and retail space and, in the greater Seattle area where I live, a lot of those tech jobs are disappearing. Big layoffs just announced here at Microsoft. So, this is less CapEx spending, uncertainty inside of companies right now. So maybe they're just right sizing. Maybe they're, this is a sign of challenges. But, the durable good was a nice print. But, honestly, I think they're just kind of restocking. It doesn't necessarily show me that we've got a strong consumer at this moment, as I think the consumer has just been slipping and slipping.
Yeah, I think we're at an inflection point. It's the best way I would say it, right? That's my own personal gut feeling. But I'll go back a little bit, and I'll tell you what I think about, say, GDP, or at least the economy growing. Yeah. If you remember when they changed the definition of recession in 2022 when we got 2 negative quarters in a row?
Yeah.
You know what they did to make sure that never happened again, because they didn't want to have to go through that fight, is that they've poured money into the economy. The M2 exploded. I mean, there's reports of up to, say, $10 trillion worth of bills they passed and the like. So the way that you never have a negative GDP is just pour tons of cash in your economy. That's the way you fix that. Now, it got so bad, David, that I think we were spending $5 of government cash to buy $1 of GDP, which is a horrible, horrible ratio. So we were getting ripped off on, when we were trying to cheat, we were getting ripped off trying to cheat. How about that? Anyway, I think this is a direct example. I think we're going to see GDP shrinking here, and I think that there's going to be a lot of people calling that we're going to have a recession, not because of anything really terribly bad within the economy, but like you just kicked off with Doge, we are really going to be slowing down the government spending and spending per se, period. That we have a spending problem. And I think if we take the money out of the system, if M2 drops, that's the metric that we look at when we look at money in the system, that's going to give you a negative GDP. You don't like to see that, but I think we've been fudging it for so long, we're going to have some negative numbers getting back to where we should be. That's all I'm saying.
Absolutely. And Scott, to your point, I think that M2 increased by 514% from 2020 to that 2022 numbers.
Wow.
Yeah, all money ever created.
Oh, man. I got to remember that.
More.
Yeah.
So, yes, of course you're going to see stimulus. And that's the reason why we saw inflation initially. All this money flushed into the system, chasing just a few items that were stuck in ports. And then we saw actual inflation really ignite under the fundamentals of our economy, where we really only saw it in 3 places previously. That was in our homes, our college educations, and our healthcare, 3 places where we are getting stimulus specifically. Now inflation's rampant. It's everywhere. The Fed can't affect those things. And in my opinion, the Fed has lost, a lot of credibility with me because they've been wrong on transitory, et cetera. And then just like you said, they keep moving the carrot on, when are we in a recession or not? It's obviously to their advantage to, kind of keep everyone calm, cool, and collected if we were in a recession. And so I can understand some of the thinking behind it. But here's the reality. I think that we've been in a recession. I think that
Absolutely.
We have stimulated it, and it's just been kind of a sugar high. So at what point does that wear off? Does everything come crashing all at once? And ultimately, can we get the right supply side economics going here that we can get our nation back on track, get into that golden age as we're approaching the 250th anniversary here this coming July 4th?
I'm hoping AI lessens a little bit of that blow, right? Because I think you're exactly right. And for the things, just as we have to remind people, and people write into my show all the time, we still have a positive a positive CPI, right? So prices are just going up, but at a slower pace. They're only going up by 2.5%, not 5% or 7%, right? And so nobody has really gotten a break at the grocery store yet. It's still slightly rising. And in order to get those prices down, people don't realize it, but we're going to have to see a negative CPI number, right? That's a true drop in price, and that's not happening right now. So, number two, to your point, I can't guarantee it, but I feel very strongly about the reason why Trump won in November of last year was because we were in a recession for the bottom 80% of the country. I mean,
Definitely.
They were not getting any relief on anything. And to your point about insurance, the Fed can't do anything about insurance with rates. You know, your home, health, and auto have gone, look at your bills. I mean, I don't know about you, but mine have gone through the roof, and there's nothing that the Fed can do about that. So that's hurting the average guy on the street. So he was beat up over that whole entire election cycle saying, no, it's not as bad. You feel better than you think you do. And basically they said, no, it's bad, and I don't feel any better, and you can't tell me how I feel. Here's who I'm voting for. And I think that's what happened. I think you're exactly right. We've been in a recession.
Yeah, and let me just note something here, and that is, you know, a couple of the ways that we might find some new solutions is actually in the new technology, blockchain very specifically. I'm aware of a company right now that is probably going to be able to reduce the prices at the grocery store significantly by streamlining the coupon process and doing this much more efficiently for Coca-Cola, et cetera, et cetera. And so this is going to change the game and bring a lot of value to the average family that they didn't have before. But then also the stablecoin act, which just went through, is another one to be paying attention to. This is now going to be the primary driver of Treasury purchases. Many people don't know this, but stablecoins are purchasing a long-dated Treasury underneath them. We need an answer right now as a nation as we continue to print and print and print. We don't have an answer to not do that. And so, you know, but it also made provision for above-ground assets. And Scott, I think that there's a third version of stablecoin that will be coming out here in the next year or so. I hope to be a part of this organization doing this, but this would be real world assets and tokenizing them like gold, silver, platinum, palladium, leaving it in the ground where God safely put it, and turning that into a coin that we can absolutely share is literally there. And so if we can do these by stable coins, I think that we can ultimately see, you know, more stability in some of the finances, and ultimately see a system go from being fiat backed to more asset backed, which I think ultimately everyone agrees is a more fair idea as the strategic wealth reserve of our nation is figured out, et cetera.
Well, it definitely seems like the way of the future, and we're definitely going to make sure we have you back on to keep us updated on what's been happening there. Awesome to talk to you. Thank you very much, David. David Stryzewski, coming to us from Kirkland, Washington. All right.